We've been following Palantir really closely on this channel for the last couple of weeks, and we've seen lots of big action with companies like ARK and Vanguard adding millions and millions of dollars worth of shares over the last few weeks. Yet, we look at the last month for the stock price chart, and we're down 30-something%. What's the deal? And if you're new to stocks or you've gotten into Palantir really, really heavy, you're probably pretty frustrated. You're probably a little bit disappointed. So what's the correct mindset for us right now in this market? We're seeing basically a lot of tech selling off. We're seeing a lot of the really hot stocks cooling down a little bit. What should we do moving forward? A lot of us are really familiar with the phrase buy the dip. And I think a lot of us have been buying the dip for Palantir. We've seen it go from $38 down to $22. It's very dippy. And if you've been buying over the last couple of weeks, you're probably like, dude, it's not going back up. What's the deal? I've been getting a lot of comments, and I've also been getting a lot of direct personal communication from people being like, dude, how long is this dip going to last? When's it going to go back up? Or should I wait longer for it to dip more? On this channel, we're always talking about dollar cost averaging into a stock and dollar cost averaging out of a stock. So you often hear about dollar cost averaging in, just be buying a few stocks per month over the very long term. Dollar cost averaging out is when you say, oh, dude, I've already made 80% profit on this stock. I can sell a few of them and keep the rest so that they can keep running. So that's dollar cost averaging out. But when looking at stocks like Palantir or a lot of the other kind of tech heavy stocks that have been selling off recently, alongside the treasury rates kind of going up 1.5, 1.8%, there's a lot of talk about inflation, or is there going to be deflation, good deflation, bad deflation? What should we do? Should I start buying bonds? Like, a lot of questions have been coming up. And people saying like, dude, is Palantir actually okay? It hasn't gone up that much since I bought it a couple weeks ago. Today, we're going to be taking a look at a few different alternative stocks, a few different ways that you can balance out your portfolio so you don't have to worry so much. And there's a business model that's come onto the scene in the last few years that's really started to bring a lot of solidity and a lot of stability to a lot of portfolios. And we're going to take a look at some of the stocks that exemplify the subscription model. So here we have Palantir on the 1 month chart. Typically zooming in this close isn't actually that helpful, especially if you're trying to relieve some stress. But, I'm usually looking at least the 3 months, 6 months of the chart, if not 1 or 2 or 5 years. Palantir does have a lot of subscription model going on. They just don't have the traction and the grip going forward yet, which I think we can expect in the coming years. So you guys know I've been a really long-term fan of companies like Apple. And I know it's not like, sexy meme stock or anything like that. It's not going to double overnight. So as we see from the charts here, in the same time that Palantir has gone down 30-40%, Apple's only gone down 10%. And Apple has been known primarily as a hardware tech company, but we're seeing that switch over to a subscription model. They're starting to offer a lot of things like Apple Fitness, the whole Apple One kind of subscription program where you get cloud, you get fitness, you get games, you get all this stuff in one monthly package, music and stuff included. And check it out here on the HyperCharts. I wanted to take a look at the HyperCharts. Super handy website. If you're not familiar with it, you can click on the link below to check it out. Check it out here. We have revenue segments. Obviously, iPhone continues to be a huge part of it. But if we cut out all the iPhone, Mac, iPad, and other, we see this services bar. And that includes all the different services I've been talking about. And this bar is just going to keep going up. And the crazy thing with Apple is that the more people are buying the hardware, the more this screen is going to get bigger and bigger. And so over the years, you're going to be getting lots and lots of growth, and again, it's not going to be huge, but you also reduce your volatility so much by having a stock like this. And if you're looking for another type of stock that's kind of completely out of the internet tech market, you can look at Costco. I've been a fan of Costco for a very long time. Roughly 0.5% of their revenue comes from their subscription model, annual renewals. Something like 90 or 95% of the people who have subscriptions end up renewing it basically automatically every year. Click up here if you want to learn more about Costco in one of my other videos. But basically, the crazy thing about Costco is that even when there's a pandemic, people just keep going. And check it out. Here is the 1 month stock chart. We go from 350 all the way down 8% to where we're at 324, basically. 8% loss is way smaller than a 30 or 40% loss like we've been seeing on Palantir. And Costco is not cheap. It doesn't pay a huge dividend, but it's also not going anywhere. And with their international growth on the horizon, I'm pretty comfortable saying that they're going to be doing well in the coming years too. So this is another way that you can be kind of diversifying and taking the stress out of your portfolio. Check it out here. Over the years, we see net sales generally trending up. Membership fees just make up a small portion of it. But the cool thing about the membership fees is that on one hand, you are paying the membership fee, so you're going to go to Costco. And on the other hand, because they're already getting a lot of money from membership fees that don't cost them anything, they don't have to charge a lot for the other services. And then here is their net income bar. It's slowly going up. You know, it's not up every single quarter indefinitely, but it's generally trending up. Here in Japan, we're starting to see a lot more warehouses open up. And I know they're starting to make a push into other countries, Taiwan, Korea, and China, and stuff like that, as well as Europe. So Costco is a really good option to look at. Another couple of companies to look at, kind of in the entertainment space, still kind of techie, still kind of associated with this big, huge growth going on in the last couple of years. But we have Netflix and we have Disney. I was blown away by the numbers. Like, dude, I've associated Disney, like you think of Disneyland and these parks. I'm from Southern California, Los Angeles. Like, people pay so much money to get into Disneyland. So I'm like, dude, the parks are shut down. It's probably not doing really well. Take a look at these freaking HyperCharts, dude. The subscription fees from Disney Plus, and I'll look at Netflix right after that too, but the subscription fees and the income coming in from these services like blew my mind. First of all, the 1 month stock price chart for Netflix, we have down 4.9%. 1 month chart for Disney, we're actually up 7%. Like, Disney is doing some crazy stuff, guys. So I should mention before I go on in this video that their net income is like just a little over breaking even for this last quarter. So check it out here. We have the revenue segments, and it's broken out by color. The red is Disney Media and Entertainment Distribution, including Disney Plus, which is like not a thing in any of the quarters coming up to this most recent quarter. And all of a sudden, it's like everything. Most of Disney stuff is shut down right now, including parks. Parks has like a little bit of income, and movie theaters and stuff like that. But red, boom, all of a sudden out of nowhere. Imagine when the pandemic is over and the parks are back open and everything's back in full swing, movie theaters are going. This bar is going to jump big time, dude. And this is one of the crazy things about Disney. Their stock price has gone up in the last month as a result of this. But if you had Disney as a significant part of your portfolio, if you were diversifying, not just Palantir, not just Tesla, if you're diversifying into these kind of different segments, then you'd have a lot more stability. So those are a few different options for you if you're looking to remove some of the dread from your portfolio. Another couple of options you could look at when it comes to strength of subscribership, Adobe. Click up here. I did a video on Adobe a little while ago. I don't love Adobe because I use Lightroom and Photoshop and all these different softwares, and I've had frustrating experiences with them recently because they switched over to subscription model. But as an investor, if I owned it, I would be pumped because they just keep getting bigger and bigger and bigger. One of the crazy things associated with that business model is that now people who live in third world countries, because outsourcing is a huge thing now, people never had $500 to buy, Photoshop or these big suites, but they do have $9 a month to sign up for a subscription. So the number of users is also growing despite being such a mature business. Another company you can look at when thinking about subscriber growth and ARPU growth over the years is a company like Dropbox, who I will be doing another video on probably in the coming days. So click subscribe if you want to check it out. Click up here to see my most recent Dropbox video as well. I'm a fan of Dropbox. I like them a lot, and I'm excited for what's coming in the future. But going back to Palantir, I think Palantir is a very long-term play. If you've dumped all of your attendees on Palantir already right now, all you can do is just kind of wait and then maybe dollar cost average out once it starts going up to 28, 30, 35 to free up some of your cash to do other things with. But I always recommend dollar cost averaging in, dollar cost averaging out, and having a slightly diversified portfolio. If you're all in on Palantir, if you're all in on Tesla, it's going to be a roller coaster and you're probably going to lose sleep unless you're really disciplined. So that is some food for thought for today, the power of subscriptions. Thank you guys very much for your time. Looking forward to your comments. If you have any other recommendations for really powerful companies that are growing despite these market conditions and despite the general market downturn because of the interest rates and stuff like that, let me know down in the comment section. Thank you guys very much for your time. Love you and have a great one.